I remember saying that if today the government decides to default or stop borrowing from
the banks will go home.
There's some people wenye watalala njaa.
Ladies and gentlemen, boys and girls, mabibi na mabwana. Welcome to this week's episode of Kenya's Market Map. Kenya's Market Map is a weekly podcast that looks at the financial happenings in Kenya and hopefully around the region. And we seek to discuss it in some great length to seek out insights and just get our opinions on different financial matters and facts. So welcome to today's episode. This should be episode number 4.
Yeah, episode number 4.
Yeah, steadily growing. So yeah, this week has been an interesting week. A couple of interesting highlights in the market.
Yeah.
We got the results of the infrastructure bond. We saw how much money people want to give the government.
Yeah.
How much people trust the government with their money. So that was something interesting. We've seen more stories with KQ, the normal, the usual. They're in financial problems. So nothing new there. Weirdly, we also saw KAA, Kenya Airports Authority, also crying, saying they don't have money. And we're like, what is happening? I thought you guys were supposed to be better than your who's the smaller brother? Is it
KQ is more.
Yeah. So yeah, we'll get a little bit into that. We've seen also some Centum released its annual report.
Yeah.
There have been some findings on their tax on property, and we'll get maybe into a little bit of that.
Yeah.
Then again, going back to the airlines, we were told how airlines across Africa have performed. They're projected to book a combined 864 billion loss, which is around 47% compared to 2019.
Yeah.
And so for that, we touched on it a little bit last week, but also just seeing the outlook of the airline sector, whether any growth or recovery is possible within the next financial year. I&M had an investor presentation this year discussing their half-year results. We'll also get into that.
Yeah.
Then Treasury, we saw Treasury on the spot over accountant fees.
Yeah.
They want to set minimum fees. We've also seen discussions on minimum doctors' fees. So I think the discussion will be just on free markets versus controlled price controls, and giving our thoughts on that, whether it's the way to go or not. That's some of it. We'll discuss as we go. Well, this time we'll try to be brief per topic, but as the if you're a Christian, when they say as the Spirit leads, for this one I don't know what what finance guys
No idea.
what finance guys are led by. Yeah.
Anyway, how have you guys been?
I've been great.
Oh, I've even forgotten to introduce myself. I'm your co-host, Kigen Kiplimo.
Yeah, that's the problem of having a new host.
Come on.
We don't know these things. I am co-host Daniel Kalia.
And I'm Easter Fanning.
Yeah, so welcome. So I think we'll jump straight into it. Oh wait, you said how your week was?
Mine was relatively fast. I mean, just like last week. I mean, times are moving fast.
No.
Yeah.
Yeah, okay. Mine was, there was nothing out of the ordinary. I think same old, but it was a good week. We're okay, we're healthy, we're good. So that's something to be positive about.
Yeah, being healthy is, especially in these times, it's not a small thing.
Yeah.
I've been good, healthy as well. Preparing about some stuff.
Were you in Coast yesterday?
Yeah, he has been in
I was-
coast.
I
He's
was
been
in
on
that.
vacation. This gentleman.
Come on, bro. Don't.
You have to spend the money that you make.
Ala.
Who are you making it for?
We are sorry. That's
Don't buy that. Don't buy that, please.
Anyway, let's jump right in, Kali.
Yeah, let's jump right into it. So the first one will start with KAA, Kenya Airports Authority. They said they are seeking treasury bailout as debt piles. So I think for me, the first thing when I saw this, I was wondering why are KAA seeking a bailout? Yet for them, in terms of the business model, they should be okay.
Yeah.
In as much as the what's it called, the pandemic affected air travel and that, I think they're still charging fees
Yeah.
on berths and all these other airlines that are using JKIA and the different ports
Yeah.
as terminals. I assume that they should be doing good. So I don't know. Keegan, might you have an idea why they're seeking an?
First, as you just said, KAA is actually doing well. I mean, their margins are very good, compared to the airline industry where margins are very little. You find that even during the COVID period, of course, airline, that is passenger travel, was really affected, but also cargo was still operational. So, most of the hangars at the airport, I mean, they were still operational, they were still working, so they were still charging, those parking fees and the like. So revenue was still there. It's not massively affected like in the case for KQ. But an interesting thing to note is that in 2019, the Treasury went and mopped up surplus cash that the KAA actually had. They had cash, I think, worth around 12.5 billion Kenya shillings. And they took this money. I think there was a program where, they were trying to, the Treasury was trying to look for money, and so it was mopping up surplus cash from parastatals. And so KAA were the people who had a lot of money. So Treasury took money from there. And, 2 years down the line,
We're seeing the result of that.
we are seeing the results of that. So for me, I have very serious questions is why would the Treasury mop up cash? I mean, take 20%, take 50%. You don't take everything, and now they're in debt, and that's another issue. I think they're in debt worth 37 billion. In debt, and actually, it's a majority of it. I think it's owed to some Chinese companies. They've had we saw, I think 2 weeks ago, if not 3 weeks, that there was the issue of Greenfield Terminal that was being done at JKIA. Then the contract was revoked. The project was stopped. So there's a mix up there. But for me, I'm still going back to the fact that why did Treasury mop up cash? I mean, you take at least some part of it, and so that the business remains functional, for the future.
Yeah. So Easter, since the Treasury took the money, should they return it if they come for a bailout?
Treasury is broke.
First of all, when you go back to the very reason why they took the money in the first place, it's because they didn't have money. They didn't have cash.
Yeah.
So they've used the cash. And if you look at I think Kenya National Bureau of Statistics released the economic performance data or results
The economic
for
survey.
2020.
Yeah.
And what you could see there is that we have a problem of recurrent expenditure. We have a problem of recurrent expenditure. That is when you're now looking at the national government and the Treasury with that regard. So, given that, they don't have the money. I mean, why do we have this government looking so desperate in terms of looking for revenues and all that? Because they don't have cash in their coffers.
But they have to bail them out,
Sorry?
They have to bail KAA out. They
Well,
have to.
eventually, you can't be so sure because
They have a 37 billion debt. So it's either they liquidate their assets. I think I said in episode 2, if I'm not wrong. If you haven't listened to that, go and check it out on our website at kenyasmarketmap.com and all the other
social media platforms.
and where our podcast is available. So I said that KAA is one of the biggest landowners in Kenya.
Yeah.
And that's land is a great asset in Kenya.
Yeah.
So it's either KAA actually is bailed out by Treasury because of that debt, or they started to liquidate their assets.
Now you see the problem now here becomes less of financial management and more of sustainability. How sustainable that be? they'll end up liquidating all the assets, and before you know it, 10 years down
We
the
don't
line,
have an airport.
they won't be able to survive.
Yeah.
So for me, I think in this case, the bailout from KAA is different from KQ's.
Yeah,
for
very
instance.
much.
Because KQ's is operational mismanagement. There's a whole lot of things going on there.
Yeah.
But for KAA, it seems that had Treasury not taken up the 12.5B
In 2019,
they would have had enough to cover their debt service and whatever. And as much as they're in
37 billion.
37 billion in debt, this is not to be paid in 1 year.
Yeah.
So you find a portion of that 12 billion would have gone to service the debt for a considerable period, mixed by their revenues.
Yeah.
So in this case, I think, for me, I personally feel the government ideally should not look down or at KA when they come up for a bailout, because it's Ukur who put them in this position.
You guys came and took our money.
Yeah.
So you should own up, yeah?
Yeah.
Like, first of all, I think we need to make a distinction between the industries that we have KQ in and we have KA in. These are very different industries. In fact, they should not be compared to each other.
Yeah,
we've
of
seen
course.
that the government refused to has turned down the request by KQ for a bailout.
I think they've just said that we haven't had that discussion.
Yeah.
No, they asked for 500 million Kenyan shillings.
Yeah.
Do you know what they were given? They were given 25 million.
Million.
So you're like,
And these guys made
Ask for
a loss
25.
of 11 billion in the first half of 2021.
Yeah.
God
And
help
also,
us.
again, another thing we have to give up KAA for is they're in an understandable position because they cannot get their debt. They cannot get their creditors to pay them. Creditors, not creditors, debtors. They can't get their debtors to pay them on time because you realize the debtors, sort of customers, to KAA are airlines.
Yeah, and they were hardly hit.
Yeah, they were hardly hit.
Yeah.
And so people are not even traveling.
Yeah.
The frequency of landing, and therefore, because you can only pay those landing fees when you land. You can only pay parking fees when you park in this airport, in a Kenyan airport.
Yeah.
So those revenue streams, they've really gone down.
Yeah.
So it's understandable that the revenue has been cut, and they also don't have cash that could have sustained them in these hard times. Like we see in other airlines in other countries, that report that you just mentioned, the comparison of the aviation industry performance throughout Africa and even international aviation, IATA.
Yeah.
You see that some of these airlines outside there, they're surviving just because they have cash. They had cash, in their reserves.
Cash
so
is
here
king.
cash is king, exactly. So here's a situation where we have our own industry, not the players in our own industry not having that cash.
Yeah.
So it becomes a problem when the government starts eating its own children. Because now how do you come and take my cash and then basically you cut my survival chances?
Yeah.
I would really want to know from the guys in Treasury why they did that.
Because they were desperate.
Mopping up.
Yeah, they
They're
wanted
desperate.
cash at the time.
Yeah.
And Easter has mentioned about the 2021 economic survey by KNBS.
2020.
We have a special edition for that, so make sure you watch that and listen to that. Lots of insights there.
Absolutely.
Yeah. So I think, to Easter's point on airlines reducing flights. So we find even British Airways, I think, just resumed Nairobi flights just this week. So you can imagine for most of last year they weren't there. So with that one, you can see now if other airlines did the same, even with KQ reducing flights to like places like New York to only twice a week. And
they had even been red flagged.
Actually, that's what I wanted to ask. So does it mean that now the British Airlines, now that they'll be having flights to Kenya, I think once a week, right? Does that mean that we have been removed out of the red list by the British government? Because Kenya has been in the red list for a long time, and that really affected KQ because Nairobi, London is one of
the busiest
routes for KQ.
Yeah.
I think people who are coming through Heathrow and coming to Nairobi, that's not a problem. If you're coming from the UK into Kenya, for us, we don't have any such. If you are to quarantine, it's your own self-quarantine.
No, you're making it sound bad.
But it's have I lied?
Yeah, we'll just continue because
Anyway,
there's something I really want you to
but
get.
if you're going to the UK, even if you're on the red list, I think if you're from the red list country and you're double vaccinated, you need to quarantine, I think, for a number of, is it 10 days?
Okay.
If you're from the amber list and you're double vaccinated, then you can have 5 days quarantine before. So there are specific rules. So that, of course, reduces transit or the number of people, but the fact that people are still able to come and go, that's why I think they've seen it fit to resume flights.
We saw Uganda Ugandan Airlines do something close to that, I think last week, if not the week before last week, where they now said that you when you're arriving in Entebbe, from wherever the part of the world you'd be coming in, what will happen is that you'll have to be vaccinated. You show your certificate, something to show that you have been vaccinated. Then a 76-hour test. A test that was done 76 hours prior to arriving at Entebbe. And then after that, you're still supposed to take another COVID test when you land in Entebbe at your own cost. So if you look at the cost, it averages at approximately 6,000 Kenya shillings in Entebbe. When you land there, you have it's mandatory, or you go back to where you've come from. Now, looking at that, and I'm looking at the economics of that, Kenyans and Ugandans, we are big trade partners. We move a lot, okay? A flight from Nairobi to Entebbe averages at around 12,000 Kenya shillings.
Which those restrictions are for every single country that you're coming from into Entebbe?
Into Uganda.
Okay.
So we find that an average cost of flight from Nairobi to Entebbe is 12,000 Kenya shillings. And the cost of that test in Entebbe costs 6,000 Kenya shillings. So, I think Kenyans will now start using Busia border. Because, I can't say it's crazy, because I understand COVID is serious and countries are taking serious measures against COVID, like red zoning. But again, I think Busia is going to be busier than usual.
Yeah, I think that's the easiest route to Uganda. I think on this whole KA issue, personally, I think the government shouldn't have an issue sorting them out in terms of the bailout. For me, I won't have a problem with that because the government took the funds in the first place. So ideally, they should not have any problems giving it back.
But you see, the other question is, after you've now answered whether or not the government should step in for them, the question then becomes, is the government able to do that in the first place? Because now we have problems with teachers wanting more salaries. We have lecturers wanting more salaries. We have pilots.
Yeah, and look at the budget. The government for the financial year 2021-2022, the government came up with a budget of 3.6 trillion, and it has a deficit of 1.2 trillion.
It's always had a budget deficit for the longest time. That's
why our debt continually grows, because that's how we are plugging the deficit at this point.
And that conversation is a lot actually on our special feature for the national survey 2020. KNBS.
Like, do they have the funds? They should have something allocated for them.
Come on.
But the big deficit
our government. Our government.
Where they get the funding, that's the problem or the issue. But fundamentally, if I'm KA general manager or managing director, like, for me, I'd be banging on Kuriatani's door saying...
We actually saw that KAA, they had issues, appointing the head of KAA, because there were interviews that were being done, and then I think the board or the ministry, what they did is that they did not approve that CEO who had been selected by the recruiting company. There was a back and forth until now that we have someone heading KAA. So I think also in the back and forth, probably it was brought, let me be political a bit. The back and forth was brought by, they probably needed someone, I'm not sure, I'm just being political, someone who, wouldn't make a lot of noise, and someone probably who, because the treasury had taken KA's money. So someone who would be,
probably
fill the gaps.
Yeah, I think bottom line for me, I think they should be paid. Whether the government has the money, that's a discussion for another day. It's a whole debate whether that could happen. So I think we move on to the other item, which is we'll have a look at Centum for a little bit. So we saw that Centum revised its tax on properties to 4 billion.
Yeah.
Previously, they had it at 669.9 million. So I think it's not something that is really new, in as much as it was reported by Business Daily this week. It's something that disclosed when they released their half-year their results.
Yeah.
So it's just that since the annual report came out this week, then they've picked up a couple of items from the annual report.
Yeah.
But essentially, they've reviewed the taxes payable, and this is like a considerable difference.
Yeah, a lot.
Yeah.
600 to 4.4 billion.
Yeah. So that's a lot. And the reason behind it is because, especially for their real estate portfolio, KRA is considering it as them buying and selling of land is their core business.
Yeah.
So when you look at the balance sheet,
Yeah.
It counts as inventory.
Yeah.
And not necessarily, it's not an asset.
Fixed asset,
Yeah, it's not an asset that you're holding to maturity.
Yeah.
Or
so when you transfer it, the capital gains tax.
yeah, so if you're holding it to maturity and you transfer it, then you're supposed to pay capital gains tax,
which is 5%.
Is it 5 or 15?
Yeah, it's 5. It's 5%. Yeah.
Yeah, which is 5%. But now, because it is inventory, this is your core business. It's the same as a retailer moving the
kawaida
stock.
inventory
Yeah,
for them, yeah.
kawaida inventory.
Yeah.
So this
They pay
goes
the corporate tax.
Yeah, so this falls as part of your cost of goods, cost of goods sold, your revenue item. Yeah. So it's your turnover. Yeah, essentially. So it comes as profit. So you need to pay
the 30% corporate tax.
Yeah.
But again, this is this for Centum the group? Because Centum the group, its core business, it's
investments.
It's a private equity firm. Now, I think it's directed to Centum Real Estate, because it can't be for the group, because that's not the core business for the group, for the Centum Group.
Yeah, it's not the core business for Centum Group, but this is the core business of Centum
Real
Re,
Estate,
which is a subsidiary
of Centum. Yeah. So, and you need to remember that Centum Re has a bond that is floated that they raised last year, and it's trading in the NSE.
Yeah,
so of course they need to disclose such information, even pertaining Centum Re.
It's quite material, man.
Yeah.
And if you look at the facts, the figures, it's very material.
Yeah.
But I think there's one thing I just want to laud about the environment, the business environment. I think some years ago, and probably decades ago, we would have this as the headline where you'd find KRA, jumping up and down saying that these people need to pay this and this and this. I think it has become more amicable, and many people don't feel this, but actually KRA is, you can actually go to KRA, talk to them about issues. So I think such an issue, I would want to believe that it's something that, KRA, behind the curtains and Centum, it was actually raised amicably, and probably it's one of the issues that are raised in the many tax tribunals that we normally have. So I think it's really good that things are dealt in an amicable way, because business doesn't thrive really well when things are done in a quite chaotic or very loud manner. So I really want to love that.
Yeah.
Can I say something about that? I smell foul play here.
Interesting. Tell us about that.
Because Centum is a listed company. And therefore, given that the corporate governance dictates, has it that they need to have an independent external auditor, a competent one. I'd like to believe it's one of the big four, actually.
Yeah.
Not sure, but
Centum. Yeah, the auditor is PwC.
So PwC has human resource that is too competent to miss out such a critical factor, because the effect of this is overstatement of profits, also understatement of liabilities, and therefore the end result is to make the financial statements of Centum, the consolidated financial statement of Centum, to appear more appealing to the investor. Because if look at the differentials here. What they should have paid is 30%, which is 4.4 billion.
Yeah.
What they actually declared as deferred tax from the revaluation of this property in their portfolio is a mere 660 something million.
Yeah, 600 million.
The difference is too big, very material. So I don't see you understand that the implications of this
case.
the implication of this is going to understate the liabilities, the tax liabilities of Centum, of the consolidated books, and also overstate the profits. So this is I smell foul play.
Kaya, as you answer that,
you can't
I have a
just
question.
do that.
So will they have to backdate? Because what happens in the previous financial years?
So
they will have to retrospective what do you call it, accounting.
that's where I'm not so sure. I don't think they will have to backdate because they've already paid the tax. That was if the taxman didn't catch that back then. I don't know whether they can come back later and claim. I don't know whether this is something to look at. I don't know whether legally they could retrospectively go and try and claw
there's a
back
provision for that.
funds but that's if I'm assuming that is if you evaded tax or did something like that.
No, if you evade tax,
But this
you
is a
go
new
to jail.
phenomenon.
If you evade tax,
Yeah,
you go to jail.
because the whole thing-
this is a new phenomenon.
Because the whole thing with this one, it's based on a recent tribunal ruling.
Yes, yes, absolutely.
That it was not on Centum Real Estate,
Yeah.
but it was another developer
Yeah.
who has a similar business model.
Yeah.
And they went to
And referred to
court.
Centum.
No, they went to court, and so the tribunal ruled that if this is your business model, if this
Yeah.
is your
Yeah.
core business,
Yeah.
then you should pay 30%.
So
you
in
should pay
essence-
corporate tax and not
the
CGT.
capital gains tax.
Yeah.
So in
before,
essence, Centum are just doing due diligence. They're just, since we've seen this by the tax tribunal, it is our obligation to do this.
yeah, we need to change our tax liability. Moves from now, which was understated at 600 million, and now it is 4 billion.
Is this self-disclosure?
Yeah.
You're sure?
Yeah.
Why don't you believe that answer? Anyway, I have a question to you guys. Do you think that Centum would have had to make this decision if Centum Re, if Centum Re wasn't, a subsidy, if Centum was just, if the development business, the real estate, was just one of the pockets, like we've seen, the way they have Longhorn in their books. So if we didn't have a subsidiary of Centum that is wholly doing this real estate business, would they have to do this decision? Because it would just be one element of their business and not their core business, because they have a range of things they're doing.
No, I think what would have changed is the level of disclosure to the public. That's the only thing that would have changed. But either way, KRA would have still been on their case. When KRA wants their bill done, regardless, because the tribunal did not affect a listed company. It was just different. But now this applies to if you as a business, you're a developer.
Yeah.
If you're dealing in even this guy, I think it will also affect the guys of kukatakata proti maguta
50 by 100.
like if that is your core business, then they're going to be paying corporate tax and not capital gains.
And there are a lot of guys who are doing that.
Yeah.
And actually they are not aware. So I think it's very good that Centum, have taken the caution early enough. And I think other people, for our listeners and viewers who are in that business, or someone who is in that business, I think it's very important that people be looking at updates about tax tribunals and the likes. It's very, very important. I mean, you can get that information, from KRA, from the Big Four. It's very important because you can find that 10 years later, you find that you've been doing the wrong thing.
Yeah.
And you're told to backdate, and you're told it's 5 billion and your business is worth 500 million.
Yeah.
You just give up.
So I think for this one, it's just the level of disclosure because, and again, it's also driven by the fact that Centum Real Estate has a bond that is listed.
Yeah.
So by virtue of it being listed, you need also to disclose
very important.
information at Centum Real Estate level as well.
Yeah.
So that is what, because I think if it had affected maybe a bank, probably one of their portfolio companies like CDN, which is not necessarily listed, so we don't necessarily need to know the level of disclosure for a company like CDN, for instance, and Centum Real Estate, which has a listed bond, is different.
Also, they would have just done it without reporting.
Yeah, they would have done it and not necessarily have to disclose it to this level of detail.
I think
That was a penny drop for me.
the factor that determines whether or not you're supposed to disclose it to the public is the significance of the subsidiary. So, for example, if it's CDN, then the mere fact that it's your subsidiary, it means that you take off profits from its core business. Yeah. When it makes a profit, there's a bit of it that belongs to you because you have a holding there, significant holding. So if the holding you have there is not material enough, so it doesn't affect your own profits materially, then you don't have to disclose it. But here's a scenario where Centum Real, I think Centum's stake in Centum Real is...
It's 100%. It's
fully
wholly owned.
Yeah.
You can't miss to disclose that.
I think you can, like, you don't have to go to that level of detail. That's all, because you just say there was we increased our tax liability in Centum. I think it would come out as a note.
So you
in the
would have
financial
just
statements.
in the financial the end of the year. You've just I've seen it in their books.
But I think also because it's so big, the difference is so big. Like it had to jump out.
Yeah. Exactly.
So so that's that on that disclosure. But the other thing that that was interesting to me when I looked at the financials. So you look at their net asset value, or rather their net asset value per share of Centum. So ideally their total assets has reduced compared to the year before. But then the interesting thing is the net asset value per share, which ideally should be considered as an intrinsic value
of the company
of a share.
Okay.
So in this case, the net asset value per share is 62.9 shillings. So this basically means once you've taken the company's assets, taken out the liability, the net asset value per share is 62.9 shillings. However, the share is trading at like 16 shillings.
Well, is it? Why do I feel like
That's interesting.
It's actually you who told me this, that the intrinsic value of a share can be so different. No, it was a conversation I was having with one of my colleagues. The intrinsic value of a share can be so different from what it shows on the bourse.
Yeah.
Because what's on the books, the intrinsic value is what is on the books. What informs the price on the books is basically equity. Equity against the number of, what do you call it? When you compare the earnings of this company and the earnings attributable to shareholders, and the weighted average number of shares.
So
that's the intrinsic value
But
of the
for
shares.
the bourse,
That's
there
what
are
is on the
other
books.
factors which
Exactly.
contribute.
Demand and supply, actually. So if we're talking about Centum, right? Let's pick the most recent occurrence, which is Dr. Chris Kirubi's passing on. That news to the market is enough to cause some fluctuation in demand and supply of this particular share. And so that is going to affect the share price. As
Well,
seen
it hasn't
on
necessarily affected the equity.
anything on the books. Chris Kirubi passing on, it's unfortunate, but it does not affect anything in the books.
That's
Why are you saying it that way?
Because that is how it is.
Okay, that's a good. It's one theory. But then on the other, the reason of maybe using or referring to net asset value, it is for this institution or this organization. If I take away what I have to find my value, if I take away, this is the value of my assets. So I have assets in real estate, I have assets in private equity, I have cash and marketable securities. So this is the cash, these are my assets. Then when you go to my liabilities, this is my total liability. So if I want to get my value, very simple, just do assets minus liability. Equity, so you find your asset and then divide it by the number of outstanding shares. Then you get your net asset value per share. And this should be the value of, ideally, this is one of this share. Should be like, my share should be this much, ideally. But then when you go to the market, it's trading at, right now it's trading at 16 point something, or it closed yesterday at 16 point something. At the time of releasing the annual report, it was at 15.6.
Wow.
So, if you're to do the math, this 15.6 is only should be around 24% of the total NAV, the total net asset value. So, the thing that is interesting is when we look at their asset distribution. So, real estate is around 63%, 64%.
That's a lot. A few years ago,
It's a chunk
it
of the
wasn't.
asset.
Yeah, it's 63%. Then private equity is less than it should have been. So private equity and cash and marketable securities do the balance of roughly 24%.
Yeah.
Do you see where I'm going with this?
Yeah.
Essentially, what the market has done is they said, for us as the market, we do not recognize your real estate portfolio because
it's
illiquid.
liquid. Yeah. It's not easy to offload, especially
Yes.
now with COVID.
So we are putting a discount on it.
That's brick and mortar, yeah.
And so the value that we are going to carry for ourselves is the
liquid bit of
the
your
liquid, your
assets.
private equity, which has at least consistent cash flows and dividend yield, and your cash and marketable securities.
Wow.
So, Kalia, are you telling me, without telling me directly, that I should buy Centum shares because once they offload the real estate, because in my own analysis, I see that even now with this issue of 4.4 billion in tax, I think Moria, the CEO of Centum, would want to really offload a lot of
The real estate
the real
holding.
estate.
Yeah.
So, are you telling me without telling me?
Yeah,
That because
it
once they
actually,
offload, the share is going to go up.
Yeah.
yeah, because that capital is going now, it's going to be liquid. So you can imagine their cash position is going to grow significantly because it's how much? Is it 43? Let me just look for the actual number.
But the offloading is not easy
Yeah, that's the thing.
because Vipingo has how many acres of land?
It's quite
Vipingo, which is a subsidiary of Centum Group.
Yeah, Vipingo is now owned by Centum Real Estate.
They have around, I don't know, 2,000 acres of land.
No, it was 10,254 acres. They've since sold
2,000.
around 2,000 acres, so they have a net of 8,000.
8,000. And this is in Sisal farms in Kilifi. Offloading is not going to be easy.
I think-
but it will be worth it.
I think I'll tell you by telling you
Directly.
to buy those shares. Because why do we buy shares? We buy one of the core factors, determinants of a move of whether to buy or not to buy a particular stock
Yeah.
is whether or not it is undervalued. If you find a share that is a stock that is undervalued, please pour your money there. If it is overvalued and therefore if it's overvalued, don't. If you have stocks there, exit.
But that
Because
should not
things
be
will
the
come
only
down
factor.
crumble.
There
It should
are
not be the
also
only
other
factor,
factors.
but it's like let's see.
It's an important factor.
Yeah, a very
It is.
significant factor. So Centum, being that it is undervalued clearly because the intrinsic value of this share is way more than what it is on the bourse.
Yeah.
Please, if you have some money that is lying somewhere, put it there.
So, from what you're saying, is that you have confidence in the real estate market.
Yeah, that's
Yeah.
that. He's also saying that,
Yeah.
which is not right.
No, imagine. Look
Okay,
at.
it's right because it's an opinion.
I'm tempted to get into.
But then the real estate
this-
now is on a downtrend.
I'm tempted to get into what we are just to do a special edition on. The performance of, if you look at the economic performance,
Yeah.
the construction sector, it is not. You can't say that it is struggling.
Wait, but do you want us to go into the construction sector? We'll reserve this conversation.
Look at
but I just want to say something, that government projects are a big contributor to construction.
So it's not real estate. It's not. You're saying that
Construction is not equal to real estate necessarily.
Yeah.
Yeah. Okay, that makes sense.
It includes infrastructure.
Yeah.
Me, I'll still say if you have some money. Me, I'm saying real estate.
Yeah.
It's really promising.
But
Because
remember,
you're
real
coming
estate
from
is on a
Corona.
downward trend.
You're coming from Corona.
Remember
And
in
imagine,
2016, 2017, when real estate was the thing. I mean, guys were saying, me, I'm going to get 30%. What are you telling me with that? You'll give me 10% return.
Well, that's being
Well,
ambitious. That's
30%
very
in-
different.
in real
That's very
estate.
different.
But now offloading real estate has become a problem.
Yeah.
You guys, you're coming from Corona times. Even in Corona times, people are still buying land. People are still buying real estate. The market did not go down as anywhere close to what you saw in the US in 2008.
No, to wait was a whole financial crisis. That is something else. I mean,
No, but it was serious in the sense that real estate was the most hit. It suffered the
because it was the main business, with that thing they used to call what is it called? I've
also
forgotten
with
the name.
mortgages and all that.
Yeah, I mean how people used to bet, sort of like it's like betting.
Yeah.
You bet that this person will pay the mortgage, and mortgage-backed assets. Yeah, that's the thing. So that's a whole other conversation. I mean, it was crazy. I mean, America sneezed and the whole world got the cough.
Yeah,
But we'll be getting into that conversation in our special edition.
Yeah. Okay. America sneezed in 2008. China sneezed in 2019.
But an interesting thing,
It's a
actually,
good
if let me just say this, I am perhaps preempting the conversation, but do you know that China's economy in 2020 actually grew by 2.3%? It didn't contract.
Yeah.
As you expected, yeah?
Yeah.
Because they're the quickest to open, to reopen.
I remember, and Mike Eldon normally says that the hardest thing to do is to predict the future. And I remember back at the end, in December 2019, I was making an analysis of how, China's economy is going to be in problems. And now how will this affect Kenya, the way we import a lot of things from China. I was looking at it from a distant sort of analysis way that, this is a China problem. They'll deal with it. It's Corona is just there, and for us, it's just how we'll be affected as a third party. Lo and behold.
Yeah, so I think with this one, basically what we've taken away is that Easter thinks that real estate is going to boom and
You must have
do well.
invested there.
So we'll see. Basically, that was the interesting thing. I think Centum's value for shareholders to realize. Centum needs to offload or convert their real estate immovable assets to
More liquid
assets.
Absolutely.
So that was the interesting thing. So now we move. I think we've actually lost track of time. Surprise.
But we want to hear from our viewers and listeners. On Twitter, find us on Twitter at marketmap_KE. Our DM is open. Send in your comments and questions. We are at LinkedIn, Kenya's Market Map. Visit our website, kenyasmarketmap.com. Go to the contact section. Share your question and comments. We really want to know what you think about this podcast.
Yeah. So I think very quickly we'll go to the infrastructure bond.
Yeah.
This was the hot wave last
yes.
week. So we saw how much the government actually took in. So the government was looking at for 75 billion.
Yeah.
And instead they got bids worth 151 billion.
Hey.
So that was a performance rate of 201.67%.
Oversubscription.
It's always been oversubscribed.
Yeah, it's.
I don't know where the appetite comes from.
I'll tell you.
Okay.
Okay, yeah. So yeah, and then they accepted 106 billion. At an average rate of 12.7%. So that's not a bad return. 12.7%. Over 15 years, tax-free. Not a bad.
Secure.
Yeah.
It's actually great. I mean, people in the developed world don't come close to that when it comes to.
No, it's because the currencies are different.
Yeah, that's a whole other discussion.
Don't get us too excited.
Yeah. So wait, you're saying you have a reason for?
Yeah.
The oversubscription.
First, let me start with a question, and this comes from a public finance point of view. Earlier, you said that the government was looking for 75 billion. They got bids worth 151 billion. They ended up taking 106 billion. Right? This is the infrastructure bond for 21 years. Back in April, we also had an infrastructure bond that was going for 18 years. And I'm just looking at the numbers. The government was looking for 60 billion then in April. They got bids worth 88 billion. They ended up taking 81 billion. Now, from a public finance point of view, I don't know if there's a provision for in central bank. You guys will tell me. But this thing actually in the Public Finance Act, you're supposed to say what this project is going to, what this money is going to finance, which and which project. You should state clearly the way the Laikipia bond did.
Yeah.
Now, you find that they were looking for 75 billion. They went there, they got more money, they took more money. So for me, I'm thinking, if this infrastructure bond was to build something, for example, a dam or something, I know the dam people, Kenyans have a problems with dam. Any infrastructure project. They had budgeted.
No, Kenyans do not
billion.
have a problem with dams. They have a problem that they do not have dams that they were promised.
Very different.
Very true.
Yeah.
But coming back to the point is, if you are building an infrastructure project, you guys had done the mapping, you've budgeted that this project will take 75 billion. That's what we are going to ask.
Yeah.
Now you are taking 106 billion.
Just
this
because
extra
there's more.
money.
Yeah.
What are you going to do with it? Because chances are high, and it has proven history times without number, that if you take more money than you require, you'll end up wasting it, especially with the inefficiencies of the government. So I am asking Kalia, are we on guesswork mode? I don't know if there's a provision that more money should be taken, but for me, I'm a very concerned taxpayer. Why are you taking more than you required? Is it that when you saw now the bids coming in, we went back and rebudgeted the money? Hey, let's rebudget here and see. Hey, now let's increase this project.
I think we are on a gluttony
help me.
mode.
Help me.
In a gluttony mode, not guesswork.
Is there a provision?
Because people know
Is
what
there
they're
provision?
doing.
No, I have not seen any provision.
Yeah.
But if there's more, you take more. Yeah.
Ideally, I think that's the logic. If you've gotten more than what you asked for, it's like
No, but from a public finance point of view, Kalia.
yeah, it's not right. It's they shouldn't do that.
Yeah.
But also, if assuming they take what's it called? Assuming we put up legislation that caps the amount that they can take from the market, what is to stop them to go and tell the market, okay, instead of 75 billion, we are looking for 100 or 150 billion.
Yeah. Because for me, my biggest issue is that these things were earmarked, right? I mean, you earmark a project.
Did they
you
actually
budget
earmark
for it.
the specific projects for the infrastructure bond?
They did not state, but they are supposed to do that.
Yeah. So, and that goes again to, I think, it goes again to the Kenyan
way of doing things.
Way of doing things, especially when it comes to
brand Kenya with bad things.
no.
Say
Okay,
just
let's say
we call a spade
not
a
just
spade, bro.
mismanagement in the Kenyan
Kutowajibika.
in the public sector.
Yeah.
I'll also refer it to like what we've seen in other spaces. For instance, the Cyton issues that have been up in the market.
Yeah.
It is an issue of Kenyans understating the risk.
Yeah.
So there's the risk of mismanagement
Yeah.
of these funds, which probably there might be inflation, most likely, in the coming years, which erodes the value of this 12.5%. It erodes your actual purchasing power. At this point, people, they do not really care whether the government is actually going to do what they say they do with the money, as long as they get paid.
The return, yeah?
Yeah, I think that's what they look at. And that's what I'm saying, even because we look at the same thing with what's been happening with the Cyton High Yield Fund, High Yield Solutions, all those where people, when there's a shock to the market, they cry and say, money has been eaten or whatever, they can't get their money back. Well, there was significant risk. You know where this money is going to. You know that the money is going to an immovable asset. So there's that risk, which was not factored in.
And lack of due diligence.
That is actually an assumption. And we had this conversation. I don't know whether we were on air when you were having it or not with Keegan. I think it was the first episode. There's that as the one who's taking the money, investors' money, you have the duty of care to tell these people that, you know what, this money you're taking it here, but this is the risk that is attached to
But
the
the advertisement bit.
And then also what Keegan has just mentioned now, we have the problem of lack of due diligence. That Kenyan investors, okay, you seem to have an issue when I say Kenyan investors. Okay, let me say most people.
I have no issue.
Let me say most people, they don't want to do their bit by doing the what do you call it, the due diligence that they need to do.
Yeah.
Because you need to go there. For the case of Cyton, I remember we used to have even the CEO coming to address us as the investors.
Yeah.
You could ask him many questions. I remember I asked a number of questions.
Yeah.
That's what I think an average investor should be doing.
Absolutely.
So when you give these people your money, you know there's a risk. You know that this money is going to build this project, a real estate project, and unless they sell this project off, there's no money to pay me.
Yeah.
So Corona comes, everyone is illiquid. Okay, most people are illiquid, so there's no money to pay you. But then again, now to revert back to the issue about the bonds.
Yeah, government bonds.
Government bonds.
Yeah.
The government is now the one taking in people's monies in there. So they have a duty of care to tell the Kenyans or the investors that to disclose any detail. Now, what you try to do, what you try to do there, that you say that maybe this excess money, it was to cater for inflation.
No,
I think
that's
the government has.
I didn't say that.
Okay,
Putting words in your mouth.
That's what I had. Okay, so now the government should. I think the government has people who are too competent. I mean, look at the head of treasury. Look at people working in treasury. There are people who are.
They know what they're supposed to do.
Yeah,
Exactly.
Yeah. But now that's
So they should.
And
they have no excuse. Absolutely no excuse for not disclosing these issues.
Allow me, Esther, to just backpedal a bit.
Okay.
On the issue of due diligence, it's very important. Investors should understand where they're putting their money. And even more importantly, I'll tell all our listeners and viewers that please invest in a product and a company that is regulated by the CMA. First, the company is regulated, then that specific product, financial product that you're investing in, it's regulated by CMA. Coming back to the...
That's another topic. We shall get into it.
But coming back to the infrastructure bond, another angle is that I am scared as a business person.
Yeah.
I am really, really scared. Because if the government can give people 12.7%, and we saw that, as at mid-June, the domestic debt, the government's domestic debt, 54% of that came from the banks. You find that some banks are actually their percentage of income of the
Interest
government
income,
the government income as a percentage of the interest income is as a total
around 70%.
is actually some banks are at 40.
Yeah.
Are 40.
I saw one with 66.
I remember saying that if today the government decides to default or stop borrowing from
The banks will go home.
There are some people when you're talalanja. I'm scared because of this. Are the banks really going to lend to people like me and other private businesses? Because the government is, as Kalia says, relatively guaranteed you'll get your money.
Yeah.
So, and it's 12.7%. Then why should they have no reason, they have no incentive to lend to me.
Exactly.
So the private sector, tutalilia nani?
Because in this case, you're looking at the government is telling you, I'll pay you 12.7%. The economy as a whole contracted by
Is it 3.1?
Negative 0.3.
0.3%.
Yeah.
Anyway, even assuming it's projected to rebound and grow at
6%.
At 6%. So if for a bank, if you are to borrow, to lend in all sectors of the economy, your return is probably going to be 6%.
Yeah.
The net return, yeah?
Yeah.
The 12.7 less the...
Yeah, the average growth rate of the economy, ideally, is probably how much you would grow. While in this case, you have a government that is offering you double
the projected growth.
Yeah, double the growth rate at, and you're going to get your money back at either way. So your biggest concern is inflation and opportunity cost, of which this thing is going to be traded.
And again, this is tax free.
I don't see any opportunity cost actually.
Yeah, there's no
opportunity cost.
The opportunity cost is not greater than what they have now.
Then it ceases to be opportunity cost.
Yeah.
But this is a big problem for people in the private sector. A big problem.
Yeah.
So I think we talked about this. We talked about this in the last episode.
Week. Yeah.
But I'm still feeling
the government is competing with its own people, with its own people, for the same resource.
Yeah.
And so you ask yourself, how does the government expect its people to grow
the economy?
Yeah.
And tax them.
Anyone would tell you, anyone who's savvy with matters economics would tell you that for an economy to grow, you have to sort out your SME first.
Yeah.
How
they're the largest
SMEs,
employers.
Exactly. So the SME sector heavily relies on credit.
Yeah.
So if the government is competing with the SME sector in terms of credit, because they're coming to you, we're coming to the same person. You are the government. I am the SME, the private sector. We are coming to Kali as the government, as the bank.
Yeah.
now you as the government comes to I go to Kalia first, then I'm like, you know what, I need this cash to expand my stock, my business, and all that, and I'll give you what rate does it lend to? Let's say 14.
Yeah.
What is 14 the rate?
13.5 because it's is it 4% higher than
the 7% the CBK is giving.
Now, in as much as I'll give him more, he knows so well that I am not as creditworthy as you are. Then you come to the same bank, then you're like, you know what? Forget about this guy. Give me that money, I'll give you more. I'll give you 12.7%.
And it's tax-free.
And it is tax-free. And then again, another thing is it is almost guaranteed.
Yeah.
So there's no Ikalia in Israel because banks are there for business.
Yeah.
Banks are there for business, not to make anyone happy.
Yeah.
So they definitely have no incentive to give.
So because in this case it's because
and
it's a cycle because the government already has a high debt appetite. So they are constantly going to be in the market to look for
extra funding.
For funding.
Yeah.
And so I do not see this position changing anytime soon.
Sadly.
Yeah, because the only if the government did not have that big an appetite for that, it's very easy for Treasury to just say, okay, we're only accepting bids at 7%.
Yeah.
And we do not care. That's the bids we expect.
Because they're not desperate.
Yeah. And so banks at this case would be like, for me at 12%, I now look very juicy.
Yeah.
And it looks very good because that spread is considerable.
Dan, that conversation about debt, I am of the opinion that the government has no other option than to borrow. And I think it's a larger conversation. We'll have that in our special edition. So check that out.
Yeah, so I think very quickly, we've actually lost track of time. The last thing that I wanted us to discuss for, let's say, 5 minutes or so. So we saw that the government wanted to control or set accountant fees.
Yeah.
And we've seen them wanting to control doctors' fees.
Yeah, last week.
Yeah. So let's start with Easter. What's your opinion on this whole?
First of all, as a student of accounting, I am very happy because how it has been. I said as a student of accounting, please, Keegan. How it has been is that it's been you want my services as an accountant or as a tax consultant.
Yeah.
It's been the typical kuja tuongee tutaongea hiyo maneno, you know. It's very what, how do you call it, it's just a conversation between two people.
You negotiate.
Negotiation.
Which is what happens.
That at times could compromise on the quality of the services I give you, because if my position is that this service I really need more remuneration, but because you're stuck on the lower fees that you want to pay me.
So I'm giving you the service worth your money.
Yeah, exactly. This is what you've paid for. Yeah. So it could have more implications in the future. For example, when the government now comes in to say that this is the much for this service, this is the least you can charge. I don't know what they're headed with that.
Maybe so you agree with ICPAK that that there should be a minimum price for accounting services? I feel so. This is a professional service, and so there needs to be professionalism here. Yeah. And so, as a means of encouraging professionalism, money is a very. I mean, we're in this for the money mostly. Yeah. So if I can, it's your source of livelihood, man. I mean, So if we make it so informal that, you know what, it depends on how much money you have. Yeah. So you want the price cap, Keegan? I'm gonna side with the consumer. It's called Consumers Competition Authority. Thank you. I'm gonna side with them because of one reason. Yes, I know that there are some people who take advantage of accountants, especially accountants who've just cleared school. Yeah. You know, because these people are desperate. They need money probably to pay back their fees, loans, and the likes. So they take lower prices. Okay, so it's actually self-sabotage in a way if you look at it from the bird's eye view. But again, the reason why I'm gonna side with those guys is with remind me again. Competitions Authority is one thing. Currently. And this might be a bit complex, but I don't know. You guys will tell me if I'm wrong. We'll sail with it. Looking at it this way, you find that right now, actually, price is not the issue. when you look at the accounting market. Price is not the issue. Why? There are people who provide services for as cheap as 5,000 per month for accounting, and there are big four who do even more than $1 million per month. So you find that the differentiator currently is not price, because price, there's a range. You can go wherever you want if you're looking for price.
Yeah.
Okay? So the thing that happens is, now the conversation currently is not about money. The conversation is about
Quality
of your service.
Yeah.
Okay? Because if mtu anaweza nifanyia na 5k a month.
Yeah.
Okay? So that is out. It's about the quality. What can you offer me? Like customer service and many other factors. So you find that once we introduce a minimum price, the conversation now becomes about price. That we want to charge minimum. No, let me go to this guy. Oh, we want to charge nini? Let me go to this guy who charges minimum. So the conversation ceases to be about quality. And when you're having a conversation about quality, there comes in innovation. People try to innovate, to come up with new ways of doing things so that to appease the customer, so that to try and bustle each other in the market share. So the reason why I'm saying let's not introduce the minimum price is because quality will cease to be a conversation. And when quality ceases to be a conversation, innovation ceases to be a conversation as well.
Yeah, I have something to say about that, but Talia, go first.
Time is
Come
out.
on.
So for me, my feeling on this matter is that I don't advocate for price controls. I think it should be willing buyer, willing seller.
But let me interrupt you. Accounting is not an essential service. So for me, I allow price controls for essential services like medicine and healthcare.
We'll also get into that. I'll mention it. So for me, I don't advocate for price controls, even in medicine and healthcare, because okay, in this case, let's start with this first one. Price control as a principle.
Yeah.
Basically, it should be, if the market is struggling, which is the case with most businesses who are struggling, they need help when it comes to filing returns. Yeah. It should be based on what they're comfortable with. And they've come and had a discussion with you, and you've agreed at the price. We've said this is the scope of services that you're going to offer. This is the price. If you don't agree, there's someone who's going to agree at that lower price. Seems unfair to other people, but free market. What maybe ISPAC could do is try to have lobby their members together and agree and say, okay, we should not undercut each other as a profession.
Like Matatus do, yeah?
Yeah.
Matatus do that.
Yeah, have that, but not have it as something that is statutory and legal and say, oh, this is what is going to happen. So that's my view. Let ISPAC come and talk to their members and say we should not encourage. It's the same thing with Uber. Whenever they decide they're going to strike,
all of them strike.
Yeah, all of them come together. Matatus, when they do that, like it's almost of a union of sorts. Yeah. Informal. Maybe that's what they could do. But I'm not a fan of having the government coming in. Going to medicine and all that quickly. If the government has an issue with how much doctors are charging for consultancy, there are public hospitals that are run poorly, that are not sufficiently funded. Fund them properly. Have them well. People will go to the public hospitals. Same thing is happening in Rwanda. Private schools are struggling because the quality of education in the public sector is good. So as a government, if you're going to focus on universal health instead of hustling someone's clinic, like just get.
I have a question for you.
Run it well. I
have a question for you. Of course, Dan is a fan of Reaganomics and Thatchernomics. Okay, I'm a blend of both. But my question is this: okay, for essential services like healthcare, a price control is important. Okay, and it's important because this is an essential service. This is something that if you lack, you're gonna die. Okay, when you lack accounting services, you're not gonna die. Your customers, your business is just gonna close because of poor services. Now, Dan, also another thing that was introduced with that is that private hospitals, it will be a crime for them to not accept patients in emergency cases before taking deposit and then treating them. Okay, so my question is this: Kwanza, if you look at healthcare, the prices have been going up and up and up and up. So what needs, actually, what I would propose is that we should the prices should not increase. The prices, they should say that the prices should not increase past a certain percentage based on, that is year on year, based on the inflation rate. I don't know if I'm making sense.
Yes.
Okay? But again, Dan, look at it this way. If you've used the Nairobi Nakuru highway, if at a place called Gilgil, there's the hospital St. Mary's, you find that many times when there is an accident along that road, you find that somebody has to go to the nearest hospital is actually St. Mary's. If the accident is around Gilgil there. And St. Mary's is a private hospital. So when you say that mtu kama, if you don't have the money, go to someone else who can serve you at that price. But then this is a special service, because at that place, if you don't, there's no near hospital apart from that in that specific area around that perimeter.
So question to the Nakuru County Governor: why isn't there a hospital around that area?
So if St. Mary's doesn't take you in, you're gonna die. But of course, I don't want to take away from the conversation that the government needs to pull its socks when it comes to service delivery.
I feel like your argument is quite normative, not what actually happens. That's what should happen. But what actually happens is very different. Because even look at what happens in the accounting sector. That's where we all started from. You're taught in class, in an accounting class, you're taught that ethics prevails. You're not supposed to undercut your competitors. That's what the code of ethics says.
Kwa ground.
Yeah. Kwa ground, you come here. I've interacted with a lot of accountants. If you don't, unless you undercut, you're not going to survive in this market. The Kenyan market, unless you undercut, you're not going to survive. If you get in with what you taught in class, that you should be professional, you should not undercut, you should provide the best quality services, you should not lie, yeah, you're not going to survive. I mean, a client comes to you, then they're like, you know what, this is a profit I made.
Yeah, but I need to do a Gordon Ramsay on my books.
Exactly. I don't want to pay that much tax.
So
if you don't do that, trust me, you're not going to get, and the best, you're not going to get clients. And the best marketing strategy, have you ever seen a billboard advertising KPMG, advertising Easter End?
No, but they're not allowed to do that.
What?
Professional services.
They are allowed to do that.
Oh, they are? I don't know.
There's actually a way you can design that. You can design your poster such that it does not shed bad light on other competitors and all that. As long as you adhere to those given provisions, you can have that. But why don't we see that? Because the most effective and most prevalent marketing strategy for accounting firms is word of mouth. And so if, Keegan, you come to me and I give you what you want, that is, you wanted to pay a tax of, what you should pay is $1 million, but you want to report a loss, so I have to inflate your costs or your expenses, and I do that to you. So, you're going to tell Kalia that, that guy will give you what you want.
So accountants are chefs in some
what you have.
That's a whole. I think that's different.
I can't speak for the whole industry, but the few accountants I've interacted with, especially from the East African community,
because you have to retain the job. Anyway, it's a whole. But in terms of price controls, for me, at the end of the day, since I'm the host today, what is we are going with.
That is final.
This is the Kenya's market map position.
Rigonomics.
Basically, I don't agree. I think even when, because I'm in the same position, I think healthcare is something that is very important.
Essential services.
Food, shelter, as in those are things that should be important. But I feel like the government now should be the ones doing that, because naturally, if the public facilities are doing well, then naturally, in order to stay competitive, the private
will have to lower.
Will have to also match or come lower, or go out of business completely. So that should be the price control. The quality done by government should be the one that influences, because now it's all inefficient. You find the same guys who are running these private hospitals and private clinics are doctors employed by the government. Because their schedule in Gavwa is not too bad or whatever. Like, I'm not going to get into that, because also the number of doctors are few. But it is a known fact that if you get a job if you're employed as a doctor by the county, whatever, it's the workload. You
start your own pharmacy somewhere.
Easier, You have where you refer your patients to.
Exactly.
So those are the inefficiencies. So if everything is run well, then that acts as the price control.
But you see.
No,
that
we are not
you
getting
can-
into it. Time is out.
Okay.
So, ladies and gentlemen, boys and girls, if there are boys and girls listening to it, I'm
Yeah.
impressed. This has been today's episode of Kenya's Market Map. Interesting discussion as always. And you can find us on
Twitter, follow us on Twitter at marketmap_KE, at LinkedIn, Kenya's Market Map.
Yeah. So until the next episode, stay safe, wash your hands, sanitize.
And remember, it's nothing personal.
Just business.
I've been your host, Daniel Kalia.
Kigen Kiplimo.
Easter fanning.
Ciao.